Hey guys, John Polemy here, Actionable Intelligence. Today is Saturday, January 24th. It's the weekly market update. The disclaimer, anything that you hear or see on this podcast or video is not to be taken as investment advice. I am not a registered financial advisor. I cannot give you personal financial advice. Please do your own due diligence. It's your money. It's your responsibility. Okay, let's get going. So we've shown similar charts to this in the past. And so what are we looking at here? Commodities are undervalued versus stocks and bonds. This is a Bloomberg chart somebody put on Twitter. This is commodities versus a 50-50 S&P and U.S. Treasuries mix. And, basically since Volcker began raising rates and crushed inflation in the late 70s, early 80s, and then we went on a 40-year, basically almost 50-year run of lower interest rates where we financialized the economy. Commodities massively underperformed the S&P and bonds, which makes sense, right? You're lowering rates from 18% all the way down to zero. We had a period of time where we were at zero interest rates for years. And so obviously stocks and bonds were going to outperform during that time. Now that appears to be shifting. People say, well, I've had people lament or email me or DM me, hey, is this the end of this bull market or am I too late? We're just at the beginning of this situation, okay? As I've said before, my worldview is a lot different than most people's. The world is bifurcating. It's breaking the post-World War II neoliberal world order of international rules and all that stuff, which really didn't really exist. It was just the empire, the Atlanticist empire, imposing its will on everybody else, is breaking down. And you're breaking the world down, in my view, into three large areas, right? The Western Hemisphere encompasses, Canada, the US, Mexico, South America. The Donroe Doctrine, if you will, is in effect. China in its influence over Asia, Southeast Asia, and, Russia, maybe not at the same level as the other two, but just because of its location, um, encompassing the entire Eurasian landmass. That's what that war is actually about. It's not about democracy or anything like that. It's about, as we see this breakdown of the world order, of the post-World War II order that was dominated by the United States and its allies in italics, this is what's happening. And so the financialization, all of the things that happened during that time are now basically thrown out the window, and we have to redo the playbook. If you don't understand this, then you're not going to understand what's happening. Now, a lot of people are going to disagree with me, but that's all right because I've found in my life that a lot of people can't see what I see. Okay. I'm not saying I'm some brilliant strategist, but a lot of people, they don't have the historical background. They're not educated on these things. A lot of people have normalcy bias. Today's like yesterday, and tomorrow will be like today because yesterday is like today. So they don't understand what's happening, and they're swayed by propaganda and media and things like that. And they have no historical background to try to, or experience to try to, navigate what's happening. And so they're lost. They actually think that, hey, well, yeah, this is all about whatever. Okay, well, okay, you can choose to believe what you choose. This is, if you're watching this channel, I'm telling you what helps to navigate or narrate what I'm doing vis-a-vis investing capital. And I would suggest to you, it's come patently obvious that because of the U.S. dominance, it got complacent. And one facet of that is critical minerals. Look at the critical minerals list. Look at how, it's not about can I mine copper in the U.S.? Where do I refine the copper? It's not that I can mine rare earths in Nevada. Where do I refine them? The refining, we used to do this. We used to have smelting operations and refineries like this. And we got rid of them because it was dirty. It was cumbersome, okay, to manage this. It was an eyesore. So we outsourced it to other countries that were industrializing, and now they have us over a barrel. You know, perfect example is a mineral like scandium that most people listening to this don't even know what it's used for. It's used as an alloy in aluminum to make it stronger. And, it's necessary for jet fighters and all these different defense products. And the U.S. virtually produces nothing. Okay, it's dependent on foreign sources, and that's just one example. Another example, which is ridiculous in my view, is the fact that the United States generates 20% of its base load electricity with nuclear power. Something that we say both sides of the aisle in politics say that they want to increase. Yet we have to import our enriched uranium and we don't the reactor need in the United States are about 40 million pounds a year, and we produced 400,000 pounds last year. So if you're in a global competition with some other blocks of countries that aren't necessarily your friends and you're in competition with them, to be reliant on them for critical materials is not a recipe for success. And so when you look at things from that perspective, you start understanding what the Don Road Doctrine is really about. It's not about Orange Man as an emperor. This is not just Orange Man. This is the whole state apparatus of the United States understands this now, okay? Or you can see the future to these other blocks and just be, like the UK is now, or some of these former countries. The United States won't dry up and blow away. It'll just become irrelevant economically over time. And so now that the wake up call, somebody hit somebody upside the head and woke people up, now we're going to have to go on this crash course to try to catch up. I don't personally think we're going to be able to do it. Why? For example, Chinese graduated 1.3 million STEM graduates last year. We graduated 130,000. If China enters a market, profits leave the room. Okay, it can dominate just about any industry. You know, so the United States cut them off from microchip lithography equipment that's manufactured in the Netherlands. Okay, ASML high tech. Well, the Chinese came out with their first machine. It's not to the same standard of what ASML can manufacture, but is anybody under any illusion that the Chinese won't protect it, won't make it better? And just say stuff like, well, the Chinese can't do anything, they just steal everything. Well, that may be true, but I doubt very seriously you're underestimating the Chinese. And the same thing in Russia. You've seen what they've done just in their defense industry during the course of the last 4 years of this war in Ukraine, completely dominating the West, including the United States. The United States, which was called during World War II the arsenal of democracy, where Kaiser shipyards were turning out one massive freighter per day in the shipyards per day during the war, where tens of thousands of aircraft were manufactured, tens of thousands of tanks, artillery pieces. Okay. Now, I'm not suggesting we shift back to that, but what I'm saying is, you know, this is the scale of what other countries are doing. And, we're talking about arguing about enforcing federal law on immigration and whether transgender people, which bathroom they should go into. This is not good. So getting back to the point of investing, which is why most people come here, I understand, is that hundreds of billions, if not trillions of dollars are going to be necessary in this quest to try to catch up. Okay. This is an opportunity of a lifetime. Okay. If you are a young person, you have the opportunity, I think, over the next 5 to 10 years to create generational wealth for yourself and your family. I do not say this lightly. I do not say this with a lot of hyperbole. I actually believe this is what's going to happen. We are in a cold World War III. These blocks are going to compete with each other. Okay. My view is that, we should be friends with Russia. They have $100 trillion in Russia. Instead of trying to steal it from them and break the country up into 16 statelets and then dominate them, which has been the playbook for the Atlanticist empire post World War II, we should align with them because their interests are more aligned with Europe than they are the Chinese. Okay. But yet, because of the politics, we have forced them into this alliance with China to our detriment. They could do the processing. They have the smelting. They have every resource that we need. But yet we're going to try to dominate them when we had no chance to do that. But these are all things that you need to think about because these are the underlying uh, sources that are fueling, helping to fuel what I think is going to be make this chart kind of look like that 75 to 80s if you look on the far left here, where commodities and real assets and the revenge of the hard hats, the revenge of the miners, the revenge of the blue collar worker is going to happen, is happening. And so billions, hundreds of billions, if not trillions of dollars will be at stake. You're seeing already just the birth pangs of this now. We've talked about it. That's what we talk about on this. It's finally happening. What we've been talking about for the last 3 or 4 years. And so it is happening. And I think that yes, the commodity bull market is a super cycle. I mean, things are just breaking out all over the place, and it's creating a smorgasbord of opportunity for those that understand what is happening. So here's Kazatomprom. This is a perfect example. This is their production profile. This is the profile reflects um, levels for producing mines only, does not account for any exploration or non-SUA resources. So um, subsurface use agreement adjustments. Basically, this is showing you if they don't make any more fines or investments, what's going to happen to their product. I would suggest to you that maybe it's possible that Kazatomprom is reaching peak production. I will say this, that they know exactly how much resources they probably have. And they said a couple few years ago, you can say what you want about Kazatomprom management and the reshufflings that we've seen there. And one of the officials, I think a couple of them were jailed for mismanagement. This is their state resource, okay? They projected a value over volume, um, or as they say in their own slide, production decisions are driven by long-term value considerations rather than volume growth targets in line with the company's market-centric approach, which ensures that uranium supply remains closely aligned with demand. Yeah, if you control 40% of the world's production of uranium, yellowcake, you're basically control the market. So why should they flood the market with uranium when this is a fixed resource? And they know more about what's going on in their country with their resources than I do. And if I can see it and you can see it, what do you think they can see? And it's like, okay, well, the Soviet 5-year plan of just trying to increase production for the sake of increasing production, that was left behind many years ago. All those executives are purged out of the company, they're gone, and you have, a market-based, let's get maximum value for our resource. I would also suggest to you, as part of this new order that I'm talking about, this bifurcation, what do you think Kazatomprom in Kazakhstan, who are they going to be more aligned with? The United States and the Atlanticists, or because of their location and because of their history with Russia and China? Well, the question answers itself, doesn't it? And so as China has 28 reactors under construction as we speak, Russia has about 4 or 5. Plus, Rosatom is all over the world building reactors for people, which include fuel provisions for those reactors. Obviously, Kazatomprom is going to be more inclined to sell their production to those two countries, to those two blocks, notwithstanding the fact they're building their own reactors or intending to. So again, where is the U.S. going to get its material? The Chinese are active in Africa, where there's a tremendous amount of uranium. And so, the United States is going to have to throw billions of dollars to revive its own uranium mining industry. There simply isn't going to be enough uranium. And Kazatomprom is going to throttle the volumes to maximize the return for itself and for the state of Kazakhstan and the people of Kazakhstan. Not hard to figure out. They're telling you right here. Not a not in dispute. So something to contemplate as we go forward. This is a perfect example of what I'm talking about. Countries are going to maximize. They see what's happening. And it's not because they're bad people or against the US. This is reality of geopolitical real politics. It's the way things are. And it's the way things are going to be. So again, this was in the Daily Hoot. This is the Ocean Wall folks down in Australia. I'll put a link to their article. It's paywalled, but there's enough information there to kind of explain this mineral extraction tax. The Hoot guys or the Ocean Wall guys have the view that the new mineral extraction tax, which didn't get a lot of publicity, is going to create a new floor in uranium pricing. I think it's an interesting article, something to contemplate, but it's another example, I think, about how the state of Kazakhstan state is going to maximize its resource. So it says here, we believe the Kazakh mineral extraction tax hike that was implemented on January 1, 2026, has been totally missed by the broader markets and warrants investors' attention. The mineral extraction tax on Kazakh uranium was initially announced in mid-2024 and is designed to capture more windfall profits for the state as prices and production volumes rise. In our view, this is about Kazakhstan understanding their dominant position in uranium production, 40% of global supply, and wanting to see this dominance better reflected in state coffers. The new tax regime creates a powerful disincentive for Kazatomprom to increase production. By implementing a tiered taxation system that peaks at 18% for volumes above 4,000 tons, the Kazakh government has effectively placed a natural cap on its most productive assets. When you add the price-based surcharge, which adds up to 2.5% if U308 exceeds $110 a pound, the state is signaling a pivot from volume strategy to a value strategy. And we just read you the slide from November 2025 that Kazatomprom said the same thing. So the state and the company are aligned. So again, we're building all these reactors. We're going to have this nuclear renaissance. Where does the uranium come from? I mean, we should have understood several years ago that the stake should have been driven into the heart of the view that Kazatomprom was going to flood the world with uranium. That didn't happen. It couldn't happen. They had other issues. Okay. And now they have formalized, they're telling you what's going to happen. They're not just going to flood the market with uranium. Uranium's going to trade very, very high at some point, into the hundreds of dollars, more than likely at some point, is my forecast. I don't know when, I don't know how high, but it was flirting with high 80s, like 90, I think I saw for the ask or the bid. Or I can't remember. Maybe, yeah, it was the on the ask on the spot market, I think, this week. And so it's going to go a lot higher because we need to get it to a point where every uranium asset is then viable to be mined around the world. That's how much uranium we're going to be short. And so I continue to be bullish. I said on Triangle Investor when I was interviewed at the beginning of the year that I thought uranium would be the best performing commodity this year. I think that 2026 is going to be the year when it really blasts off because these things are just the cascading news is just going to get into the psyche of investors and money's going to pour into the sector. It is pouring into the sector. And so I expect that to continue. Here's the world's largest nuclear plant. Well, one of the reactors at the world's largest plant back online. This is the Tokyo Electric Power Holdings, the utility that operates the Fukushima plant that melted down in 2011, restarted a reactor at the world's largest nuclear plant, which also operates in north central Japan. The first steps in energy production at the number 6 reactor at the Kazawazi Karawa nuclear power plant are important because the operator is Tokyo Electric Power Holdings, the same utility that runs the ruined Fukushima Daiichi plant. TEPCO's past safety issues at Fukushima have led to public worries about operations at this plant that they're restarting, which also sits in an isolated quake-prone region. Japan has reversed its post-Fukushima nuclear phase-out policy, citing the need for a stable and affordable energy supply and the rising cost of fossil fuel imports after Russia's war on Ukraine and other global conflicts. Yeah, we've talked about this before. So, um, TEPCO has a while to go. It has to increase confidence. There's all kinds of scandals, how they were falsifying information, all kinds of stuff. But this is the first step to bringing more of their reactors online as they establish trust. Once you destroy trust, it takes a long, long time, if ever, to restore it. And so they are under a lot of scrutiny. And so I would suggest to you that they're going to do the right thing. Again, this isn't single-handedly going to bring the uranium price, force it up. But again, it's brick by brick. Again, news after news item after news item piles up weekly. Okay. And we are a long way from the end of this nuclear uh, bull market. So this is a chart off Twitter. I think it's a little bit dated. It's probably a little bit higher than this. But you see, this is the long-term chart going back to 2018 when you could have bought uranium at $20 a pound. Everybody hated uranium. We were going to shut all the reactors down. Nuclear power was, not needed because we were going to build windmills and solar panels, yada, yada, yada. That didn't happen. We had the blow off, initial move higher during the, run in uranium that we had back in 2023. And then, of course, it just pulls back. This is what things do when they go up. This is still a bull market, okay? It retrenched. It took about a year. It consolidated, and now we're making the next move higher. So I expect uranium to trade well above $100 a pound this year and continue higher. Uh, we don't know the future with 100% certainty, but that seems to be the trend. And so, again, it's the thing that I'm most bullish on going forward. I see it has the most upside down skewed supply demand uh, dynamic of any resource that I've ever seen. So yeah, I continue to be bullish on uranium. So we saw silver break 100 this week. You look at a chart like this and you're like, okay, wait a minute. How much higher is this thing going to go? Are we at least due for a pullback? And yet there will be people in the comments. I'll be honest with you. I sold a large chunk of my physical silver, and it wasn't easy, guys. This is something I want to talk about. If you're a doomsday guy that's going to live in the bunker and you think we're going to have a monetary crisis soon and you want to hide out in your bunker with your gold and silver, okay, I get it. You're entitled to your view. I don't share that view, uh, but you can have that view. I used to be kind of thinking like that when I was younger. I've become more mature now, um, a little bit more worldly. So I had been buying silver. I mean, I remember when I was working for wages, this is going back 25 years, I would go to the local coin shop on payday and I would pick up 5 or 10 ounces, but and haggle, or 25 ounces or buy a couple of 10-ounce bars. And this is when silver was selling for like 4.5, $5 an ounce. And so $50, okay, I'll buy it. And this stuff starts piling up. I was hoarding silver, if you will. Okay. I would just buy it, keep stacking, if you will. I was one of the original stackers. This is when nobody ever bought precious metals. You go to these coin shops, these strip malls, and you're haggling with this guy. It's like in his 70s. It's been around. It's like, I don't want to really pay 450 an ounce. The guy wants 475, okay, we negotiate. And I remember those days. So the stuff piled up. And so I was like, okay, well, I think there's more opportunity in other things. Again, we sell overvalued here and buy undervalued. Um, I have a good return on it. And so I go to sell it and I visited various dealers. And, I've seen this also on Twitter. I go there and they're all crying poor. Well, so we have to negotiate that. This is the problem with buying physical silver is selling it. Now, if you're a doomsdayer and you're never going to sell it because you believe we're going to have a monetary crisis and your silver is going to save you and all this stuff, okay, well, that's fine. But most people buy the stuff and want to sell it. And so you get a situation where you get into a situation where you have to pay a premium when you buy, and then you have to sell at a discount because everybody that touches that silver from when you sell it, including that dealer, if he sends it to a refiner or he sends it to somebody else, another middleman who sells it, they all have to take a percentage. And so when you see $100 silver, you're not going to get $100 silver when you walk into dealer. So you have to negotiate. You have to be willing to walk out. And it's a pain in the butt. Okay. It's a good thing from a certain perspective because it's so cumbersome, it does force you to be a longer term holder. Okay. But when you go to sell, understand that you're going to have to negotiate. And these guys are not well capitalized, all of them. You can't walk in there with 1,000 ounces of silver, and the guy's going to have to write a check, and it's going to take him, if he signs stuff to somebody else, it's going to take him 30, 60 days to get paid. So you need to understand this when you go into it, unless you're dealing with the big, huge dealers. Okay. So that's just, I think there's more opportunity in the miners right now. The cash flows that are going to be announced when they announce earnings coming up for the fourth quarter and the guidance going forward, if these metal prices maintain anywhere near where they're at or even go higher, people are going to start extrapolating the cash flows. Right now, people don't believe in what's happening. So it's a kind of a climbing of wall of worry. I will tell you this too, because where I went to sell my silver, there were people in there selling all kinds of scrap gold and silver, rings, jewelry, spoons, the whole shebang. Okay. And I had to wait. I had bars. I had 100-ounce bars that I was selling there, Engelhard and Johnson Matthey bars. So I'm sitting there waiting, watching this, and I'm thinking to myself, okay. And one dealer I went to, he said the refiner kind of cut him off. He said, I don't need anything more right now. So it just depends who you're dealing with. Be aware of that, is all I'm saying. I don't know how high silver can go. Again, you know what my feelings are when I see charts like this. I wouldn't be surprised if you had a big pullback to shake out all the people. It's very frothy right now. There's a lot of chatter on Twitter from the bleacher bums and chatter boxes and tourists. So, ultimately, I think probably silver goes much higher, but I wouldn't be surprised if there's a major shakeout to get rid of the shoe clerks and schlubs. And you know, and I also wonder, how much of a shortage is there when prices get this high, everybody starts dishoarding all of their, precious metals. How how prevalent is that? We don't really have a read on that. So these are just things to be aware of. You can look at the previous times when silver has went up. We haven't seen anything like this before. Okay. I mean, for this thing's basically doubled in the last year, right? It's over 100% in the last year. So, you have to think about this, guys. You have to think about, okay, what did I buy it at? What am I going to sell it at? What am I trying to achieve? If you're a doomsdayer and you're in your bunker, well, I guess you're never going to sell. But if you're somebody that's, look at this as a speculation or investment, there may be other vehicles for you to use instead of, you know, getting killed on these spreads. It's the one thing I just wanted to point out. But this is like a magic number, $100 silver, because we haven't seen it before. And these round numbers are usually a big deal. So we'll see. They could be sell on the news. We don't know. We could see a major pullback. Wouldn't surprise me for silver to drop back down to 80 or 75 and shake out everybody. We've seen this over and over in various commodities. Silver is in a massive deficit because of its industrial uses, primarily around solar panels and things like that. And I think that's going to continue. Okay, but we need to you know come up for air here and take a breath. That's all I'm suggesting. But I do think that there's going to be tremendous earnings in the gold and silver miners, and cash flows are going to be unbelievable, and the guidance going forward is going to be fairly unbelievable. Um, we're kind of in a sweet spot, as I've said before, because most commodity prices are low, right? What you need to look at is that previous mining cycles and commodity cycles. What you're going to find is as copper goes up, as nickel goes up, as oil goes up, it's going to start putting cost pressures on miners. Okay. When copper is $4 a pound and diesel is, $3 a gallon, and you make your projections to build a mine or whatever, iron ore, with all these supplies and everything, and then the prices go up in the interim, then your capital spending goes up. That's going to translate into your higher costs. Okay. And so this is what happens as you see all these metals go up. They're good from one perspective, but they're bad from other perspectives for people that are trying to bring assets online. And so you need to take that into consideration. And what you will eventually see, I think, is when energy starts rallying, which it's done fairly well in the last couple of weeks. We'll talk about that in a little bit further on. The energy is such a big input into mining, and the grades have gotten lower in a lot of mines. You're going to start seeing maybe some compression at some point in margins. Okay. And so then some of the euphoria comes off. Okay. I'm not suggesting that we're not going to have a blow off in mining, but you need to understand how it works. It's not a one-way trip. There are costs, and if all your other commodities are going up, these are all inputs into uh, the mining cost. Or if you're trying to bring a mine online and trying to buy stuff, everybody's trying to do the same thing. Guess what's going to happen to pricing? It's going to go up. And people are going to say, well, I want to expedite. I want to get closer to line. Okay, you got to pay a fee for that, expediting fee or something like that. So something to keep in mind as copper goes up, as nickel goes up, as aluminum goes up, as labor becomes scarce, costs go up. We're already seeing, I've seen miner after miner talk about scarcity of labor. Okay. Skilled labor isn't there like it used to be. This is an industry that's been basically shellacked for 40 years and ignored. There's not a bunch of miners sitting on the bench at the union hall ready to go back to work. Okay. You're going to have to train a whole generation, new generation of miners and people that know how to do this stuff because there's not that many. And they're going to be the ones that do exist are going to be demanding um, premium pay. Just something to think about. So we've shown this chart before, just a reminder, it's as it continues, um, gold replacing dollars and central bank reserves. It's a trend that's in place. It's been in place. It will continue as, again, I reference back to that, what I talked about initially about this bifurcation and into these multipolar world that we're entering. If you're going to declare the rest of these other blocks your competitors or outright enemies, they're not going to hold your reserve asset. Now, they're not going to dump it, but it's going to be a slow uh, process of disgorging. Because why would you hold assets? Again, a lot of this really started to turn up when the U.S. made that massive mistake of confiscating Russian central bank assets and Russian assets. That was not a good move. It sent the message. I've said that over and over again, and you can see what's happened since then. Central banks are like, okay, I'm just going to slowly, quietly disgorge myself of these treasuries and these dollars and go into gold, which is not unprecedented. This is the way things were back before the financialization of the world back in the 50s, 60s, and 70s. Gold was the reserve asset, and it will become again. It is becoming that again. And the central banks are not limited by price. They just buy. So Poland increasing gold holdings is another example. National Bank of Poland approved a plan to buy as much as 150 tons of gold, which would increase the country's holdings to 700 tons. Quote here for the statement from the Polish Central Bank, this will place Poland among the elite 10 countries with the largest gold reserves in the world, unquote. I think Poland has really diverged from the rest of the EU. They're making a lot of, you can look at what they've accomplished there in the last 30, 40 years in the economy. It has the opportunity to dominate the EU at some point, as Germany used to be as a manufacturing hub. They're making all of the right decisions for the most part economically. And they're just slowly but surely, they don't have a problem building coal plants. They're building nuclear power plants. They don't allow unfettered immigration from the third world into their country. They've absorbed a lot of Ukrainians, 3 million, I think, Ukrainian refugees. Those people will not go back. So that solved their labor problem. Okay. And you can make whatever inferences you want if you'd rather have a North African or Sub-Saharan African refugee or Ukrainian refugee that's educated and has some skills. I'll let you mull that on your own. No comment necessary. And so they've got a lot of advantages. I think that they've kind of toned down their rhetoric also because I think people can start to see what's happening with the EU. It's just basically irrelevant at this point. I mean, they basically got rolled up by Trump and other people at this Davos thing. They're a joke, and they're irrelevant. And the people of Europe need to take a decision. Um, do they want to roll over and just be weak and forget what their ancestors did and just surrender to Islam and to a bureaucratic nanny state in Brussels run by a bunch of dumb women or that don't know anything? Or do they want to reclaim their former glory? But that's going to mean the dissolution of the EU. We'll see. I don't know what they're going to choose. I find it interesting that when you look at an electoral map, like in, say, Germany, you can see a distinct bifurcation between East and West Germany. East Germany, which was the German Democratic Republic, i.e., communist during the Cold War, overwhelmingly AfD because they understand what a bureaucratic state is like. They lived under it, okay? And then you look on West Germany, you see CDU, Greens, things like that, Social Democrats, okay? A little bit of AfD, but not much. And so this is going to eventually lead to problems because why do I need to stay with this state? They're not representing, maybe it needs to be two states again. Okay. And you're going to see more and more of this. You're seeing more and more cracks in the EU foundation. The EU is just simply not going to exist. It has too many internal contradictions, kind of like the US does now. Because of our immigration, we've created these cracks. It's like you get a crack in a sidewalk and then water gets in it and it freezes, the crack gets bigger. Okay. And if you ignore it, it will continue to repeat. And so if you're not going to fix these problems, if you're not going to allow your economies to be unshackled and become competitive, not hard for the EU. They just need to like look at Poland and do what they did. Look at the Republic of Georgia, do what they did. Okay. Look at South Korea. Look at, all these places that boom, Singapore, Hong Kong, do what they did. Okay. But they're not going to do that. The administrative state, which is in power, they would lose their power. They would lose their wealth. They would lose their privilege. So they're not interested. And I think we're at the point now, you can have elections with people that are not big in favor of the EU, like you saw in Uranium or Romania, and they just put the guy in jail and, well, we'll have another election until we get the results that we want. You see that across the country from country, where you even have the German political class saying they're going to ban the AfD. So that's democracy. So, anyways, I think Poland is actually cheap as an emerging market and is doing well, but I think over time, just going to pull further and further away from the orbit of the EU. I can see a time when um, Poland, Hungary, Slovakia, countries like this will eventually maybe break away from the EU and create their own trading bloc, and be more aligned with the Eurasian power, which is Russia. But that's down the line. But I just don't see any future for the UK, for France, for Germany, except for conflict, Islamization, and decline. That's all I see. And that's going to bring up an interesting concept, as I've said before, when you have the UK with nuclear weapons, France with nuclear weapons, nuclear power plants, and what do you do when that's now a radical Islamic government? Because what you will find, if you pay attention, is that the UAE, the Saudis, Egypt, they have gotten rid of all their radicals and sent them to Europe. I mean, I pointed out the fact that the UAE foreign minister at a meeting, it was in the media, I saw the video. He said the things that these radical Islamists say in Europe, they would never be allowed to say here in Jordan, Saudi Arabia, the UAE. We would have put them in prison. It's too radical. And so what do you do when they eventually take power, which that's their goal, and you're in a military alliance, i.e. NATO with these people? How does that work? You see, that's what I'm talking about, internal contradictions. It won't stand. And it won't certainly be positive for economics. Let's put it that way. So here's Czechs buying gold for wealth preservation. So it goes through the article. I'm not going to read the whole article. Investors view the metal as a safe haven. Goes on down here. It says, according to people increasingly understand that saving in gold is not price speculation, but a way to protect wealth over the long term. Yes, because in the West, we have untenable finances. We have social programs that have been promised, retirement programs, medical benefits, Social Security, Medicaid, all this stuff. Can't afford it. Can't afford it. Um, and we find out that maybe a third of our budget here in the U.S. is just fraud. Okay. And nobody's interested in doing anything about it because the people that are in control, your political class, both benefit from it. Both sides of the aisle. I hate to tell you that. They all are in on it. Okay. As George Carlin said, it's a big club and you ain't in it. And so that's why people are buying gold as a store of wealth. Okay. Because all roads lead to inflation, all roads lead to debasement. Okay, this is the only option left. You can have the debasement now, or you can have it down the road. But you're going to imagine getting a Democratic Congress full of Democratic socialists and a Gavin Newsom. You think the deficits are big now? You think the money printing is big now? You think talk about politicizing the Fed is a big deal now? You haven't seen anything yet. They'll bail out every blue state, every blue city. They'll open the border, bring in 100 million immigrants, give them free stuff. And what do you think is going to happen to the currency? You might as well light it on fire. That's what's going to happen. There's a good chance that's your future. People have asked me many times, this is not hyperbole. What do you see as the future? I don't know. Look at the 1970s and 80s Brazil and Argentina. That's your future. Economic decline, chaos, no upward mobility, the elites dominating and profiting. That's it. And a lot of inflation and regulation and them telling you what to do. That's your future in the West. What other future is there? This there's no, how long did the Doge last? 3 months. And now, both sides of the aisle want to spend. There's not one, there's maybe two people in the entire Congress that talk about cutting spending, or at least not increasing spending. There's no constituency in the US for this. Okay. With all of the uproar about all of the fraud just in Minnesota, imagine what's going on in California, Illinois, New York, and every state. What's happening? Well, I'm being told by the ministry, you have in the states, the actual judges in the states blocking investigations, political apparatus rallying, circling the wagons to block investigations. The federal government's coming in. They don't have, it would take them years to unravel this. They don't have all those resources. How many investigators do you think they have? How many FBI agents do you need? How long does it take to build a case? It's almost too big to fix at this point. And so, yes, this is why people are buying gold. People intuitively can figure out, if they can't articulate it at least, what's happening, what's going to happen. And that's what these real assets are sniffing out. Gold and things like that are very good at sniffing out debasement. And even Czech citizens get it. So bullish on Latin America. This is the Brazilian ETF breaking out of a 15-year downtrend. Well, depending on how you want to draw crayon marks on charts, but this is something that we have been talking about, and something that I am bullish on. I own Brazilian stocks. I think that it opens a tremendous opportunity. As a matter of fact, Interactive Brokers has now, I guess it depends. I don't know what the criteria for approval is, but you can now trade Brazilian stocks on the Bolsa down there via Interactive Brokers, assuming that you qualify. And again, I don't know what the qualifications are. So you don't just need to buy the ETF. It opens up a whole new avenue for investing and seeking out value. You don't just have to buy, you know, the ETF where you're mostly going to get Petrobras and Vale and stuff like that. So it'll still do well. But there's probably companies down there that are going to go hundreds and 1,000% during this rally. And this is, kind of what you're seeing in a lot of the emerging markets, a lot of which are tied to commodities. This is to be expected. So here we go. China gold holdings, gold reserves at record levels, U.S. Treasury holdings at 18-year lows. You know the story. You know why they're doing this. This has been going on well before. The Chinese are long term. They operate long term. I think their gold holdings are well above what they publicly announce. And yeah, this is going to continue over time, in my view. When you tell them that we're in a competition with them now for, as this realignment happens. So if you tell them that you're going to expect to attack them, or you're going to have a war with them, or you're going to insert yourself into their sphere of influence in, Taiwan and these other places for geopolitical reasons, of course, why would they hold your treasury securities? That's not how this works. So I wanted to point this out. Not because I think we're kind of EV bubble pop for the most part because all the subsidies died, just like we said for years would happen. What I wanted to show you is, first of all, EVs use 6 times more minerals than an internal combustion engine car. What I wanted to show you is down here at the bottom, copper, graphite, nickel, lithium, how much EVs use. These are all critical materials that are needed for more important things than screwing around with electric vehicles, golf carts, whatever you want to call them. Um, and so, as we're in this critical minerals shortage, every one of these things I believe is on the critical minerals list. And you're going to waste it by building electric vehicles. I don't think so. But the price of these things is going to rise and crush, the inputs into these, and that makes the price of electric vehicle go up. Take away the subsidies, no one buys these things. Very few people. Okay, they're not. The ICE is coming back, and as Toyota kind of was first on, it's the hybrids that actually make sense if you want to go this route, where you have, you know, a small internal combustion engine and batteries working together. It's the most efficient way to do this, and that actually uses more minerals than even an EV. So, or at least platinum and things like that. So, yeah, I just wanted to point this out. Again, yeah, some people on here, I'm sure listening, own an EV. Bully for you, but they're not going to remember the compound annual growth rates, and they were going to become half the vehicles by 2032 or whatever. That's not going to happen. We've cataloged the write-downs and write-offs by GM, Ford, Mercedes, all these big companies when they realized, they bought in because they're part of that uh, elite class of so-called leaders of our society, and go along, get along, instead of saying, this is stupid, I'm not going for this. Because that's how you get invited to the parties and get to hobnob with the senators and congressmen and, Larry Fink and all the rest of these people. They're all in the same, excuse my language, circle jerk daisy chain up there. And, so you go along. What does Mary Barra care? It's not her money, right? What is that guy that running Ford? He doesn't care. It's not his money. Hey, they got paid. They'll get their options even if they get run off. They've got a package when they leave. Okay, so just wanted to point that out. A little bit of soapbox there. I get it, but never been a big fan of electric vehicles. I'm not impressed. So again, here's Chile. Copper production down. We've cataloged this. It's not like it's a super big drop, but it's dropping. Okay. That's in the context of a world where we need more copper. Again, go look up Robert Friedland, the CEO of Ivanhoe Mines. Look up his history. He's Mr. Copper. He knows what he's talking about. And, he makes these fantastic statements about copper being bullish on copper. He says stuff like copper's going so high that you need a telescope to see how high it's going. Or he says that, people don't have any clue. American people have no clue what's getting ready to happen as far as the critical minerals of how much we need to mine and what is actually needs to happen. I agree with all of these things. People say it's, him just talking his book. No, so we have seen a little bit of pushback, as the copper price has flirted with $6 a pound. People have pushed back a little bit and saying, but this is going to go higher. Okay. And you can say, well, I'm substitute aluminum. Well, aluminum's breaking out now. So we are in a commodity super cycle. The companies that have already built their asset and have look for the low cost producer. Well, in a bull market, the high cost producer actually does better sometimes. But, somebody that already has their infrastructure to the ground is not going to be affected by higher prices, that is already up and running, has their labor, and streamline their operation. They're just going to be minting cash going forward, in my view. So is $200 oil on the horizon? This is 150 years of data, says these are in the same asset class, talking about gold, silver, and oil. And they point out over here, you can look out through history. I'll put this on the Facebook page if you want to analyze it some more. I thought this was interesting. It just shows these various, basically that oil, gold, and silver, for the most part, move together. Okay. And you've seen gold and silver now launch. You see what oil's doing. Yes, I believe oil, it says $200 oil on the horizon. Yes, I fully believe that we're going to have record nominal highs in oil at some point in the future. Um, it's slowly but surely becoming my go-to asset. Was I early on calling oil? Yeah. Will I be proved right? I think so. Notwithstanding the fact of what other people, views are. This is cyclical. This is, these are cyclical industries. And you already see, the IEA is kind of pulling back a little bit from some of the things it said, but still maintaining its glut theory. Very well could happen. I don't know. Um, I don't think it'll be 4 million barrels a day. But we see all the little, things are happening where, like in the Bakken with Harold Ham's announcement last week, the water issues in the Permian, all these things are going to conspire to hold back, this massive supply response we need because price dictates it. And the underinvestment has been multi-year now. So you're kind of baked into the cake at this point. Even if you ramped up everything, which they're not, more and more companies announce that they're just going to hold production. They're not trying to increase production. They're not going to invest money because it's 60 something dollars a barrel. It's not worth it. Now we have seen oil kind of rally recently. And I think people are going, so many people, I think, how do I know what the catalyst will be? I don't know. I just know that um, in a commodity super cycle, if you don't think oil is going to participate, then you're just wrong. It will. It might be one of the last commodities to participate and break out, but it will. It has to. Okay, and that's my view on it. And I just don't think that you have a commodity super cycle where all commodities are moving higher and oil goes down. I don't see it. I don't see what the catalyst is for that. Maybe in the first half of 2026, it stays stagnant, but I certainly, where's this glut, 4 million barrel a day glut? Oil should be at 35 or $40 a barrel. It's actually been up the last couple of weeks. What's going on? So anyway, something to contemplate. And oil stocks have been moving. I was on with Capital Cosm yesterday, Danny, and we were talking about this. And it's like, yeah, I just buy the crown jewels. That's all I have to buy now. And as oil become back into the perception change, then it, kind of like it is with gold now, right? The time to buy the senior gold miners was 2 years ago. Last year was the time to buy the intermediate gold producers, moving down the capital stack. Now in 2026, with gold where it's at, it's now time to find those potential uh, 5 and 10 baggers down in the project developers and smaller companies that are bringing a mine online. Okay, and they're going to see more of that. Everybody that has a dormant mine that can probably, if you can't make money at $5,000 gold and $60 deep or oil prices, then you shouldn't be in the business. And so you're going to see a lot of mines come online, and a lot of them are going to be very cash flow lucrative. So there's a race to do that. Okay. And so that's going to be where a lot of the news is going to be. Then at some point, in my view, because of the cash flows that the big miners and intermediate miners are enjoying, they can't help themselves. They haven't been able to do it for the last 10 years, literally, because I believe you're going to have a tremendous mergers and acquisition wave. You're going to see a miner start spending those billions and billions of dollars. Instead of returning it to shareholders, they're going to rationalize and say, we need to replace our reserves. We need to take stakes. We need to buy this mine. We need to buy this resource, these project developer. You're going to see billions of dollars, I think, in mergers and acquisitions and outright buyouts and partnerships. Money's going to flow. We're already seeing that in the beginning in the last 6 months or so, just with capital raises for mining promoters. Okay, it's at near-term records. It's blasted off, which you would expect, right? Because what do they say in Toronto and Vancouver? When the duck quack, feed them. So yes, they're going to create more mining shares and recycle that money, hopefully into more drilling and proving up resources and trying to advance projects. But some of these people will be, maintaining their lifestyle. So we'll see what happens. But yeah, I think oil's going tremendously higher, and we're basically where gold stocks were 2 or 3 years ago when nobody wanted them. Global oil discoveries are way down. These are conventional discovered volumes down, 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 down. This is the problem. Demand goes up, supply is going down. Not hard to figure out. Oil demand is crushing expectations. Reason to be incrementally bullish oil medium and long term. Demand is crushing bearish expectations, up 1.4 million barrels year over year. You're at over 100, close 106 million barrels a day of oil demand. Okay. I keep telling you, the IEA has been wrong for 18 years on its demand forecasts. People listen to the IEA. The only way this is going to turn is when price kind of change hits people upside the head and causes the perception change, where they say, "Hey, I got to get on board with this, oil at 75, 80, 90, $100 a barrel. When's the IEA going to be right?" Okay, at some point it starts creating a news cycle and froth and demand, and people are like, wow, I need to get involved in this. Okay. But right now, you have all bearish news. All of these entities that are still respected for whatever reason are still negative and bearish, but the statistics aren't really playing out. Oil demand is going to continue to increase for the foreseeable future, year after year, like it has for the last 100 years. Notwithstanding the fact that if you have some major cataclysm like a great financial crisis or like a pandemic. Notwithstanding that, oil prices or oil demand is going to continue to march higher. So we talked about Brazil, but the whole Latin American stock markets are breaking out. This isn't going to be a 1 year situation. These are typically multi-year events. Still time to get on board even after the big moves. This is just the beginning. It won't be straight up. There'll be stair steps. There will be times when things pull back. And my mantra, what do you do in a bull market, a long-term bull market? You buy the pullbacks. So a little bit of the political stuff. I just can't help myself sometimes. This shows the monthly southwestern border encounters in thousands. This is the what I put up here says your political class wants to replace you. That's what they've decided to do. Okay. You're not going to cooperate with the program. What they're going to do is, and you see it now being exposed. This is why it's so important to pay attention because this is what's happening. And you get to decide this, people. It had nothing to do with we couldn't do it, we can't do it. With the existing laws on the books, which exist, federal law on immigration, the purview of the federal government. There are laws that are on the books that have been on the books. Nothing's changed since Mr. Trump has got on board. Just enforcing what's already there. You see what's happened to immigration. This is just a sampling. It's just the southwestern border. Okay. And so you have to ask yourself, why did the Biden administration open the borders? Because that particular party decided it no longer needed union members, the working class, the lower middle classes, the blue collar, hard hat people. Okay. You can go back and look at Dianne Feinstein, Bernie Sanders, Nancy Pelosi. I'm talking 10, 15 years ago when they talked about illegal immigration and how it affected workers, how it put strain on medical, how they were against it. Okay. Now they've taken a decision that we're not going to do that. What we need to do is bring in a whole nother class of people, give them free money, give them free benefits, and then they come beholden to us politically, and that entrenches our power. That is what happened in California. Okay. That is what they want to do. You see what happens. That was one of the major issues in the last election is immigration. It's the only basic issue that I care about because it permeates all the other issues in my view. If you bring in 20, 30, 50, 100 million third world peasants, well, you can take a visit to Guatemala or, sub-Saharan African countries and see what your future is. I don't want to live like that. We don't have to live like that. It's enforceable. Okay. This is a civilizational crisis. You see what's happening in Europe. This is what your elites want to do. They don't need you. They don't want you. They just need a constituency to keep them in power, to get their hands, the federal government. Let's just talk about the federal $7 trillion a year budget. There's so much opportunity to grift and steal and get rich. Everybody knows it. Everybody listening to this, every politician gets rich when they go there. Where's this citizen legislator that goes there and serves for 1 or 2 terms, takes his $174,000 salary, then goes back to doing whatever he was doing before? Doesn't exist. These people go there for one reason and one reason only, to get their hands on those budgets, to give uh, money out to their constituencies that recycle it back to them in contributions. This is not hard to figure out. Show me the incentive and I tell you the outcome. Charlie Munger says. It's not hard. And so they don't need you, steel worker. They don't need you, nurse. They don't need you. All they need is this third world peasant class that they give free stuff to. And of course, if you never had anything and you come here and you get free 60, $70,000 in benefits, of course, and they show up and say, hey, sign this paper for mail-in voting, what are you going to do? This is why you need same-day voting, like most countries have around the world. No paper ballots and voter ID. You can look up the states that don't have these things, and they're all democratically controlled states. I don't believe that the Democratic Party there's that much support for it. There's the peasant class, there's certain constituencies there, but it probably amounts to 30, 35% of the population. The only way that they can win is this is what they did in Minnesota. You see, I think this is why the big push happened in Minnesota, because it's kind of a lab showing everybody. Okay. And so the FBI and the Justice Department, they can hone their skills. It's easy, it's controllable. You couldn't have started this in California or New York, okay, where the fraud is off the charts. Down here in the Valley, Medicare and Medicaid fraud off the charts, SNAP fraud off the charts. It's everybody knows it. Okay, I've had conversations with people that have worked for me that they work, have good jobs, and they still scheme and scam. It's just how it is. And you got to put your foot down. So this is what and people would say, when people said about that replacement of the population, yes, of course. You're a conspiracy theorist, you're a racist, you're a xenophobe. Okay, well, this is what was happening. Now it's not happening. And of course, just like a vampire doesn't like sunlight or holy water, they're screaming and hollering. Why wouldn't they? They're under attack. If they're successful in attacking the money, they're successful in stopping the immigration from the third world and deporting all these people. ICE, notwithstanding the fact of all the hollering and screaming, has deported about 2.5% of the population of Minneapolis. It's about 10,000 people they've captured already. And okay, so it does work. And of course, the left is going to do everything it can, pull this up, because this is it. This is the battle. Because if they get back in, you can forget about, because your weak Republicans who are in on the game too won't codify the SAVE Act, okay? Won't vote for it, won't bring it to a vote. All these other things around codifying into law these executive orders, they're just going to get reversed, just like it happened in Virginia. Okay? So, yeah, this is how it is. And, this is another reason why I'm not optimistic about it. But then again, you never know what's going to happen, right? Because who would have thought that, like the changes that happened in Argentina at some point, or the changes that happened in El Salvador, at some point people get so fed up, right? But I don't think we're to that case yet. But at some point you can get to the point where it's irreparable. And this is why I think the EU and America eventually is even, in danger, because of dissolution because the internal contradictions are too big. And what do I mean by that? I mean, this basically sums it up. This is the net migration inside the US. Okay, you see the states green, which have net migration into it, where people are moving into, and you see the states where people are moving out of. Now, they're not all like Nebraska and Kansas. It's not necessarily the opportunities are better because it's mostly farming, smaller cities, right? But the rest of these are, democratic hellholes that are becoming more bureaucratic, harder, more expensive, taking on dumb policies with energy and for business. Now, you look at Louisiana, Mississippi, that's not necessarily the case. They're just run down and, don't have the same opportunity. But you look, Texas, Arizona, Nevada, Tennessee, Indiana, Florida, you see the migration away from New York, from Illinois, from California. And, when they do this is another reason why the deportations are so critical because in the census, the way it's currently set up, you count every body, even if they're illegal, for the apportionment of congressional seats and for electoral college votes. Okay. And so if you did this properly and you didn't let all these people in, probably the Congress would be, you'd have 30, 25, 30 less Democrats in it. It's just that simple. They're losing their populations because their policies suck. People go where they're treated best. It's that simple. But if you flood the country with 30, 40, 50 third world peasants that all are going to vote for them, then the whole country becomes California. Now, many Californians like the weather. They like paying high taxes. They like it. Okay. But, the place is a disaster. Minnesota, for example, with 2 terms of Tim Walz, Democrats in power, they had an $18 billion surplus. $18 billion rainy day fund. They've squandered that now. They've spent it on all these, what's going on. A lot of it evidently is fraud. And now they're going to want to raise taxes because, yeah, we need more money. And so people are on the streets protesting in favor of this for their own demise. It's actually quite fascinating to watch how people's minds work and how they think. I mean, can you really protest and vote for your own demise just because you don't like how Donald Trump talks publicly? I mean, it's a little bit strange to me. But anyways, I wanted to show this because, yeah, I mean, I'm not black-pilled. I don't know what's going to happen, but we have to invest and we have to invest accordingly. And Europe, I think, is, going down the tubes, at least Western Europe. It doesn't, it's done well, the stock market's there, but I think long term, I wouldn't buy a house there. I wouldn't create a brick and mortar business there. It's ridiculous unless I see massive political change. And the US is teetering on that edge. Over the next 5 or 10 years, we're gonna determine the fate of this country. And I don't personally think the country will exist as a political entity just because the entitlements are going to destroy the dollar. And once the dollar goes, this whole thing's going to come unraveled, in my view. But that's down the line. But again, nothing's, I'm not a fortune teller. That's what the trend is, in my view. I mean, if you think the deficits are big now, wait till you get a Democratic Senate, House, and President. You haven't seen anything yet. All right, guys, that's it for this week. Again, we're looking good. Things are going good. Some people have already made their whole year just in January is not even over yet. So we'll see how it goes. We're monitoring. We are positive. Things are now starting to play out as we thought they would over the last year or so when we forecasted this. And not to take a victory lap, but things are moving in our direction. And we're grateful for your viewing. We're grateful for the subscriptions, people that have taken subscriptions, and we just are looking forward to a massive and productive, profitable 2026. Thank you, and we'll talk to you next week.